and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. Well, last week was particularly eventful. We had the RBI governor's resignation, followed by the appointment of a new governor, elections in 5 states, and postponement of the Brexit vote by Theresa May, as well as the vote of confidence against her. Well, all developments, with the exception perhaps of Brexit, have been discussed ad infinitum in the media. Nonetheless, I'm going to return to a subject on which I don't think we've heard the last word yet. Never mind the hours of prime time and the column inches of space spent on it. We're going to focus on the tensions between the government and the Reserve Bank of India. But we're going to look at it not from the perspective of the here and now, but rather from the larger, longer-term perspective of the inherent tensions between fiscal and monetary policy authorities in a country like India with a full-service central bank. And how best can we navigate these issues? Joining me in the discussion are 3 stalwarts. Ashima Goyal, member of the Prime Minister Economic Advisory Council, former member of the Technical Advisory Committee to the RBI on monetary policy before the MPC, TCA Srinivasa-Raghavan, veteran journalist who has authored a book on the often tense relations between government and RBI, Dialogue of the Deaf, the Government and the RBI, and Ananth Narayan, Professor, SPJ Institute of Management Research, Mumbai. Welcome to the show, Ashima, TCA, Ananth. Given the time inconsistency between central banks and elected governments, with central banks having the luxury of time and elected governments marching to the dictates of the electoral cycle, friction between the two is inevitable. But what makes India different from other countries is that unlike elsewhere, the Reserve Bank is a full-service central bank. It is not only the monetary authority but has a host of other roles as well. Does this increase the scope for friction? We'll go into the details a little later, but for now, very broadly, does the RBI's multifaceted roles increase the area of inherent conflict? Let me start with you, Ananth.
Well, Mythili, absolutely. I think globally, every central bank can have an objective which is more long-term and therefore be at cross purposes with the political imperatives of the government of the day. And RBI and the government of India are no exceptions. There are, of course, nuances in the Indian context which bear watching. The nature of the power of the government over RBI is very different. At least de jure, the government of India can control what the RBI does. Of course, de facto that rarely happens or only obliquely happens. I think the broad takeaway is the following. All decisions of the government and of the RBI need to have accountability and need to be reviewed. What we need, I guess, is a proper framework where the various aspects of RBI's operations, whether it is regulatory, management of reserves, monetary policy, supervision, all of these are as objectively evaluated and studied as possible. And the government has a role in this, but does not use short-term political compulsions to dictate the workings of the RBI. I think that golden mean is what we need, where you have proper accountability, evaluation and research. There is oversight, but not oversight which is completely politically dominated, purely for obtaining short-term imperatives and doing away with the need for long-term reform.
Okay, that's an ambitious wish list, Ananth, but would you agree with him, TC? And which of the RBI's multiple roles increases the scope for friction with the government? Come to think of it, there's perhaps friction even between the RBI's different roles. Is it, for instance, the bank roles as a merchant banker to the government that's responsible for raising debt for government as cheaply as possible that comes into conflict with its interest rate setting role? And that's just one example, and there are many such areas. TCA?
The friction is inherent, like you said, and it doesn't matter which role we are discussing. The friction itself is not very important. It's the degree and extent of the friction that becomes important. And the reason for that is that there will always be 2 views or more than 2 views on any situation given the context or any issue given the context. So now, who pushes hard, who pushes harder, who resists more, who doesn't resist very much, who's more accommodating, who's willing to listen to the other side. Most importantly, who is willing to postpone something that he wants, and who is willing to insist that this must be postponed, or yes, I will do this immediately. Now, it doesn't matter what you're talking about. It could be the supervision of banks, it could be the exchange rate, it could be the interest rate. So in the end, yes, politics enters, and as you said, what you call time inconsistency, that problem is there. accountability is there, all of that is there. But from what I have seen of the Reserve Bank and the government and finance ministers in my 40 years in journalism, and what I have read about it in the previous, 35 years, the personalities of the finance minister and the governor play an extremely important role. And it's extraordinary the degree to which these two personalities can or tend to clash. So I think that's an important factor that you need to keep in mind.
Possibly TCA, but that's very unfortunate. Ultimately, policy depends on personalities. So my question to you, Ashima, really is that has the shift to inflation targeting increased the inherent conflict? Because not only has it made RBI an inflation targeter, it has also put interest rate setting, which is in fact the main instrument for monetary policy, largely outside the remit of the RBI. And in hindsight, was that a mistake? Because though rates are now set by a committee, albeit with the RBI governor casting vote, has this resulted in the MPC taking a slightly blinkered view, ignoring aspects like, say, exchange rate, financial stability, etc., all of which are very vital importance? Ashima?
Yes, I agree that the last few years we've seen really tension reaching a flashpoint, and it might be because I don't think it's so much the inflation targeting regime, because what we adopted was flexible inflation targeting. But what was implemented, was strict inflation targeting. And maybe it was partly, as TC Ananth was saying, it was personalities or a particular view which was more conservative, which led to but in a very rigid inflation targeting. But in a country like India, you have to be flexible, because inflation is the supply side has an important element, has an important effect on inflation. So it's not just the interest rate and aggregate demand. In fact, this issue, and it does contribute, because we have some research which shows that the RBI's guidelines on inflation help anchor household inflation expectations, apart from commodity price shocks. So I think inflation targeting should be interpreted. You're targeting inflation, but you can do it in many, many ways. Your instruments need not only be the interest rate, it could also be your money supply, the composition of money supply.
That we were very right on that, Ashima. But Ananth, would you agree that after the last MPC meet, we heard the rather strange comment from the former Governor Urjit Patel that CRR, the cash reserve ratio, is not a part of the MPC remit? Isn't that a rather narrow view of the MPC's remit? Exactly what Ashima said. We've tended to interpret inflation targeting in a very narrow, rigid way. Ananth?
Yeah, I tend to agree with Ashima and what TCA said earlier. If there is a problem that I have with, let's say, the monetary policy framework or the currency exchange management framework or liquidity framework, it is that we don't have adequate research to show that the framework is right. Sometimes we border on dogma. Interest rates can control inflation. Really, in the Indian context, is it that simple? Is it a linear equation? Do we ignore the entire financial stability, exchange rate, etc.? So I think those evaluation is important. The government is not the right body to do it. Let's not forget the government has its narrow perspective as well. A government of a day will always want more lending to happen, more farm waivers to happen, more SME loans to happen, more forbearance to happen. Now, that is not necessarily the most objective way of evaluating monetary policy. I think what you need besides the government and the RBI is a strong ecosystem of research which actually looks at what the framework are and comes out with a critique, which then can be used by the government or the body overseeing the operations of RBI to actually ask those searching questions. At the moment, it's a bit of interest-based, dogma-based policies without real objective evaluation happening around it.
Sure, Ananth, but I'm not sure research always gives you right answers and right answers over time. But TCA, would you agree that the shift to inflation targeting has made the Reserve Bank look at issues even more in silos than earlier?
Well, I have no idea what it has made the RBI do, but I do know one thing, that we did have implicit inflation targeting for a very long time, which used to originate from the government, and that was when the DA payments fell due is when the government started getting worried about inflation. If you look at the volumes and the files of the Reserve Bank in the 70s and 80s, you will find that, and even in the 90s, one of the primary concerns that the government had was that it should keep the DA payments to a minimum, which meant actually inflation targeting. So there's nothing new about inflation targeting in India. It's just that the agency has changed and a different set of considerations have been brought in. So the question now really is, when you are targeting or when you're using only the interest rate, you're actually looking only to the bond markets. You're not looking at, like the others said, you're not looking at all the other factors which have an input into the inflation rate. And there, I'm afraid, the MPC, I don't know what they do in the sense that we see the minutes, but I don't know how they arrive at the decisions at, whether to increase, decrease, whatever. But that's really not all that terribly important.
Ashima, if we agree that the multiple roles of the Reserve Bank of India are what really complicate life all around, can you think of which are the roles that we could hive off? We tried that with public debt and it really hasn't worked. It's still with the Reserve Bank of India, whatever government might claim.
No, I think that it is very complicated, especially this full service, the many different aspects the RBI looks into. And that is why you cannot have a very simple rule-bound framework. And I had a paper in which I had argued that here delegation is one of the ways in which this coordination is achieved. So if you have a pro-growth central bank governor and a conservative finance minister, things work out somewhat better. I think in the past few years we've had the opposite, because it is true, as TC has been saying, that the government has always been highly concerned about inflation. In fact, one RBI officer was telling me that we get along very well with the government. Whenever we want to do something and they don't agree, we tell them this will raise inflation. Then they agree. So the government earlier was, but I think currently the situation is, when the RBI is narrowly using the interest rate, is focusing on the interest rate, then it can't affect inflation very much in India. So what the government does affects inflation more, many supply side measures that they take, such as MSP and so on. And what happens to the exchange rate. While the RBI is actually affecting demand more, since we are becoming more and more interest elastic, many categories of demand. So in such a situation, coordination between the finance ministry and the Reserve Bank is very, very important, because the objective of each is affected better by instruments with the other party. So therefore that they talk to each other and that they come at, that they're able to sort of say, all right, if the government is taking action which is lowering, as we are seeing currently, inflation is falling very precipitately. There seems to be some fundamental improvements in the agricultural side, which are keeping inflation low. Then the RBI can afford to be more relaxed. But here you had an RBI that was interpreting its mandate, or the MPC that was interpreting its mandate very, very strictly and constantly over forecasting inflation, and therefore keeping real interest rates much higher. In India, we've traditionally had negative real interest rates. Now they were very high.
Absolutely, I agree with all three of you. Ultimately, it comes down to perceptions and dialogue, and that, I think, was where the problem lies, because if you cannot really see eye to each other, can you at least have dialogue? But I'm afraid it's time for us to slip into a very short break. Please do stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and I'm in discussion with three stalwarts, TC Srinivasa-Raghavan, Ananth, Narayan and Ashima Goyal, on what is the way forward to ensure that frictions between fiscal and monetary policy authorities are reduced to the extent possible. And before the break, Ashima was talking about how the multiple roles of the RBI and how there are going to be problems. It's not easy to hive off some of these roles, because the fact is that we've got public debt, for instance. Even if the fiscal deficit comes down as a proportion of GDP, government borrowing is unlikely to come down significantly given the demands for development. So what is the way forward? Should we in fact give up the pretense of hiving off the public debt function of the Reserve Bank of India and get real, Ananth?
I think it should be possible over time, Mythili. Look, things like the Public Debt Office, I would say even reserve management like a sovereign wealth fund, regulations, monetary policy, currency management, you could argue some aspects of these are distinct. Of course, public debt has a lot to do with liquidity operations of the RBI as well. But at the same time, we have central banks globally, the French Treasury, for instance, which is distinct, which manages the debt of the government. I don't think it's that important in the current context. I think RBI is doing a reasonably good job of managing the public debt as it is, but absolutely these jobs can be removed. I think, but the other aspect I'd like to bring in is that not all of this can be completely governed by the government. For instance, take the case of regulations of banks. Obviously, the government has been saying that PCA bank relaxations need to happen. You need to have more liquidity going into the system, etc., etc. Again, you need an objective framework to evaluate this. I think neither the government nor the RBI is perfectly right in such cases. The government obviously comes with a political imperative. What happens in such cases is we often lose sight of the true reform which is required. Frankly, even for banks, I think the onus of the reform lies with the government. Things like recapitalization, things like actual reform of both public sector as well as private sector banking. These are the true panaceas and true medicines. Instead, we waste our time arguing about the palliatives and the painkillers, which RBI can provide by way of forbearance or by way of injecting liquidity. Sometimes the quality of the discourse goes away. I think it's important to ensure that while you have this government RBI coordination, we don't lose sight of what is really required in the background, and we don't waste our time entirely on fighting over the palliatives and the painkillers.
That's true. In fact, you're right on that, Ananth. Government also has a lot to answer for why it delayed recapitalization. Recap bonds were an easy way out. But TCA, do you see similar contradictions in other areas, like in the RBI being banker to the government, inspection and supervision of banks? Because countries like the UK did try spinning off supervision of banks, but then brought it back under the Bank of England. So what is the way forward for us in India? Should the government, for instance, have a say in regulation? Because Ananth said, no, it should not. But when this, the PCA framework, for instance, impacts a larger economy, as Jaitley pointed out, then where does one draw the line? TCA?
Well, you played ball by ball. I mean, you don't have hard and fast rules. You have to absolutely look at the context. You can't be saying that, look, this is what has been laid down in the Dharma Shastras, so this is what I'm going to do. You just you have to look at the context, and any failure to do that will result in this kind of confusion. By the way, on the topic of confusion, an ex-RBI governor told me the whole world is confused, but we in India are at a higher level of confusion. So I think that sums it up, and you can guess who it was. But he was making a serious point. He said that now the coordination function has moved from the central bank to the government. There's also a third party involved, in the sense that there are three variables. You have monetary policy, you have fiscal policy, and you have regulation. Now, these three are constantly coming into contact and friction with each other, and the coordination between them, who should do it, whether the government is the best agency to do it, that's an open question, and I don't think any country in the world has been able to fully solve it, mainly because, except China and Russia and countries like that, because you have politics coming in the middle, which nobody ever quite explicitly takes into account in the economic models. I have been writing that the greatest disservice that John Maynard Keynes did with his equation was that he introduced G into the aggregate demand function. What does G mean? It means borrowing. There's no other way that the government can finance all the expenditures it wants to revive aggregate demand. So there is a problem that we all face, not just because of politics, yes, but also because of the theoretical framework within which the politics functions. So I think we need to resolve those things, and I don't think we are going to resolve those things.
True, particularly when, true TCA. Particularly when Indians don't pay their taxes and government just has to borrow. But Ashima, if, as TCA said, you have to play it ball by ball, is it possible at all to have a structured framework to manage these areas of conflict? The FSDC was meant to do that in some ways, but it clearly hasn't delivered. At the same time, if you really play it by ball, then there's always scope for disagreement, discretion becomes a factor, and that's not a very good way to go, is it, Ashima?
Yes, I think that one way to understand our problems the last few years is overreaction. I think earlier we had too much stimulus after the global financial crisis. Then there was the other extreme. So actually, you know what, I agree with Ananth that the government has to do many, as I said, supply side structural reforms, but we've been focusing too much on structural reform. So the coordination that I think is feasible, if with clarity you decide, if the government is moving as they have on a lot of structural reform, then the central bank can be somewhat counter-cyclical in demand, in regulation also, because they have been somewhat too strict, which has really brought down credit growth in India is absolutely very, very low compared to most emerging markets where you're worrying about a corporate bond and private corporate debt problem. So I think this coordination, you can't swing from only structural reform to only printing money to finance the government. You have to be somewhere in the middle, find a balance where if the government is doing certain things right, then the central bank can afford to be more relaxed and support those things instead of being over strict. And as for coordination, apart from the government and the central bank and the personalities and whether they can talk to each other, now we also have this Financial Stability and Development Council. That could perhaps play a role if people are, people are really able to sort of sit, and discuss things clearly.
Oh, I couldn't agree with you more, Ashima. I think you've hit the nail on the head. But Ananth, granted, it is going to be very difficult, in fact, to actually have a very rigid framework when it comes to resolving differences that are largely based on perception. But even so, would you agree that there are some areas that lend themselves more easily to a set of rules, as in the case of sharing of RBI's profits? And here, maybe we could perhaps go the WTO way, special and differential treatment. Some issues you can have rules and some issues allow discretion. What do you think, Ananth?
Oh, absolutely, and I completely agree with Ashima as well. Everybody has to pull the oars together. The way in which maybe we could resolve this entire issue is I don't like the current situation where the executive has actual de jure control over RBI. For instance, this question of excess reserves on RBI's balance sheet, so-called excess capital on RBI's balance sheet, even if the argument is right, even if the argument has merit, you will always raise the suspicion that this is an executive 6 months before the elections trying to fill a fiscal hole by pushing for this. So maybe a better framework is to follow the US model, where the RBI is responsible to the parliament rather than to the executive or a subset of the parliament, and give a couple of reports every year. That way, that'd be a lot more of distance and professional connect there. At the same time, you then need to have a proper evaluation of RBI's functions. Let's not forget, RBI has potentially not done well in certain areas. NBFC supervision, for instance, or deployment of reserves, for instance, managing the exchange rate, for instance. And these are questions which are best evaluated objectively by people from research, journalists like TCA, so on and so forth, which can then feed it to the parliament for them to actually raise questions to the RBI governance. Now, so rather than have a government or a board control the day-to-day functioning, I think it should be a broader context of a parliament, and there should be complete scrutiny of what RBI is doing, research around it, and try and find out a way of operating in the future in a better manner. And by the way, monetary policy would also come in that ambit. Maybe that's the way to go forward.
TCA, would you agree that between the two alternatives of having government call the shots or having the RBI call the shots, a better way would perhaps be to have a central board, but a more meaningfully constituted central board of the Reserve Bank of India? The central board has so far played a very marginal role. Should we change that if we can simultaneously change the composition so that nominations are not political, and like the Bank of England's court of directors or the US Federal Reserve Board, you have technically competent people and leave maybe monetary policy formulation to the MPC, but everything else with a central board, but a well-constituted central board. TCA?
Well, it used to be like that until 1949 when you nationalized it. I now have come strongly to believe that the Reserve Bank of India should be denationalized. Where is the virtue in the government owning it 100%? And if you find virtue in that, where is the point in objecting to the powers that it exerts over the Reserve Bank? For what, 500 years, the British also operated with a privately owned central bank, the Bank of England. It was only in 1946 that they nationalized it. And why did they nationalize it? It was because they felt that the Great Depression had been caused by these excesses of the markets and that the government needed to exercise control over money. You have to ask that fundamental question, should the government exercise control over money? Is money supply, rather than the creation of money, rather than guaranteeing the value of money, and essentially a sovereign function? Now, unless you arrive at these deeper answers, there's no point in flapping around saying, oh, well, government should not intervene and the RBI should cooperate and so on. But given that we have this situation today, we have to make the best of it. We have to live in this situation, and for that, I genuinely believe personalities are far more important than the rules, etc., because two accommodative personalities will arrive at solutions, two non-accommodative personalities will fight, and we've seen that.
Okay, Ashima, I know you need to leave, and we've also had to wrap up our program. I want one quick last word from you. Is it all personalities, or is it more than that, Ashima?
I think some clarity in roles, and people are very cynical. I think TC is also talking about how we have been resolving this problem. The institution of the MPC. I think many Indian institutions are strengthening. They are getting, they have a strong technical cadre, the RBI does, and also does. So there are inherent institutional strengths. And one of the problems is when you impose a governor from outside, Ananth was talking about the importance of research, but very often it's research that is done in the US and which is not perhaps so relevant for the Indian context. So we need some way of, drawing on a lot of knowledge which we have internally also, and then personalities, institutions, research can kind of work together in the correct direction.
Oh yes, but I'm afraid we've run out of time completely, so I'll have to wrap up this discussion here right now. The problem really is that when it comes to coordination of fiscal monetary policies, there really are no easy answers. It's like what Mark Tully once said about India, there are no full stops really. And on this particular issue, it doesn't seem as if there are even commas for that matter. Thank you so much, Ashima, TC and Ananth, for joining me in this discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.